Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be looking at the 36th Commitments of Traders Report of 2020. But before I start the review, for those of you who are new to COT analysis, I'd like to recommend you our website where we offer a lot of educational material, not only in written format, but we do have some very useful videos as well that will help you better understand the basics and fundamentals of COT analysis. Back to the review, and starting off with our first market, the heating oil market, where we have a 22% change in commercials positions. You may see that change size on the chart. Visually, it is much greater than average, no question about that. Possibly amongst the top 5 greatest changes in the past 1 year. It is a bullish signal, I should say, suggesting some strengthening coming early next week in this market. If we move on to the 5 years chart, we can analyze the stress levels in this market, which are not that large at the moment. The last major extreme, this unsuccessful bullish COT extreme, by the way, from February of this year. And, you know, as in case of any analysis or strategy, nothing is 100%. And that applies to COT analysis as well. So here we were expecting a shift in the trend, seeing a greater prices coming. But that did not happen, and we've seen a further decline in the market. Traders are not at those bullish extremes at the moment. That's something we can conclude from this recent report. The next market will be lumber, where we have a 20% change in commercials positions, and of course on a 1 year chart that's more visible. Again, we're talking about a larger than average change size. In this case, this is a bearish signal, but I'd like to draw your attention to the fact that we've been witnessing a decline the past few days in lumber markets, so the signal could be a little bit late for us to act upon. And if we move on to the 5 years chart, then we have a chance to see and examine the extreme situation. Now, the last major extreme was this bullish one from April of 2020 this year. Very, very successful signal. We have not reached those significant bearish extremes like the one from May of 2018, just before that top. This suggests we may see actually the continuation of this rise in prices of lumber. Crude oil, the Brent crude to be specific, is our next market with a 11% change in commercials positions. And another example, this is something I would neglect or not really take into consideration. You can see that the size and magnitude of that change in traders' positions is nothing unusual. So might as well just move on to the 5 years chart, and again, nothing exciting over there. So let's just move our let's move our attention to large speculators COT Extreme, where we have coffee on top of our list with 198 report extreme in large speculators positions. You can see that it basically means that since November of 2016, we have not seen such an extreme for the market. That was just at that top. This of course does not mean that we're going to see this to be the top and suddenly prices will decline. But it does say that stress levels have built up to those extreme levels, and we may expect the market in the medium to long term to show us a top. Sugar, the next market, the exact same report extreme, 198 report extreme in large speculators and in commercials as well. Of course, a very similar picture. So this suggests that we should see some decline happening in this market. We've seen, of course, much greater extremes in the past. This suggests that we should see further declines happening in the medium long term. The next market, the New Zealand dollar, this will be the last for this review. We have a 115 report extreme in large speculators, and we don't need to go back too much to see that there was much greater extremes in the past. So suggesting that although this is a bearish extreme, we should not expect a sudden decline. It could happen, but we would definitely be waiting for that if traders have increased their stress levels to even greater levels. The extreme of July in 2017 was an example for that, much greater extreme over there. As I always say, these reviews are very short and show you just a brief picture, an example of how you should approach COT analysis. There are, of course, a lot of markets to analyze. We only show you a few. If you would like, you can always look at new CO2 report types, the disaggregated, the traders and financial futures, CIT report. We also offer you all sorts of data types, the futures and options data, where not only the data is not just coming from the futures contracts, but also options as well. And we have constructed the options only data type, which is pretty unique. You can always dig deeper into your analysis by looking at multiple report changes on a defined look back period. Doesn't have to be all time or 52 weeks. You can actually choose your own specific look back period. You can also chart, of course, these on the charts. You have the option of looking at the COT index, the COT move index. We offer you this long-term trend indicator, which is pretty useful for anybody who's trading in the medium to long term to really have their attention on the long-term picture. And of course, you can analyze volume and open interest as well. So thank you very much for your attention. I appreciate you being with me. I wish you a great weekend, and I hope to see you next week. Take care. Goodbye.